Damn, I'm clapped. All right, everybody. Welcome to the Sunday charting session. How y'all doing? How y'all doing? Looks like nobody want to join. All right, all right, all right, all right. All right, let's get straight to this. So Monday was lesson of Monday. Lesson of Monday is go for a fixed 1 to 5 RR. Be smart and know the equator, have awareness, know about the trading guideline rules on the prop firms. And that's lesson of Monday. I think I was good. Tuesday, no setups. Wednesday, lesson of Tuesday is whenever there's a 4 CRT in the near continuation in that specific day, I will not look for an hourly CRT. I will specifically trade the 4 CRT. If he follows my rule, if he doesn't follow my rule, I do not trade, period. If I miss one bus or miscalculated, I will simply wait for the next bus. And the lesson of Thursday is I must only enter the turtle soup model, which is the Dawn model, nothing else but the Dawn model. Why just the Dawn model itself? Because if I focus on multiple things, none of them will actually go to a true mastery. So if I focus on turtle soup itself, the turtle soup itself will go to a true mastery. So that's the lesson of Tuesday. Now that Thursday, then yeah, because we're going for a fixed 5 hour as well. And the lesson of Friday is there's a new lesson here. Friday is I cannot break even early. My entry is the OT. My stop is the turtle soup. My take profit is the total. My take profit is the turtle soup as well. I go for a fixed 5 RR. I do not break even early. Break even is a scam. And yeah, I only break even when it makes sense. Either if it's the end of the week, or if my take profit is hit. Nothing else. And that's the lesson of Friday. The next lesson of Friday is that okay, now from now on forward, I will be trading the lower lows or higher highs. So let's just say there's a failure swing, one pair takes out the high, while the other pair does not. If my pair was the one to take out the high, I'm gonna still look for a trade. I'm gonna be looking for a 15-minute or a 5-minute lower time from CRT with a CRT and look for the IX50 drive pattern in the 1 minute time frame. Either let's just say this low time legit low. If it does have legit low, trade looking for a model 1 and confirmation, as that's it. But if it does not have the confirmation, I will be looking for that looking soup, looking for another drive back to push downside, game as a model 1, then going up to the upside. So having the same rule but in the 1 minute time frame and having a total soup entry. So that's that. And if my pairs don't want to punch out the high, I'm gonna be looking for a lower time for CRT with the house CRT. If it's a 15-minute, I'm supposed to enter the 15-minute time frame, I'm gonna be looking for a 1 minute. Right, I'm gonna go scale out to the 1 minute. If it's an hourly CRT, I'm looking for a 5-minute. Looking for a 5-minute CRT to execute my pair that if my pairs don't want to push out the lower low. So if the other pair like GU makes a failure swing, while my pair makes a lower low with an SMT, keep in mind, if my pair, and let's just say my pair pushes out this high, but the correlated pair, either DXY or GU, they both push out the high, I will not execute. So there's going to be no execution. But if my pair is the pair that pushes out the high, well, GU or DXY, so let's just say GU does it, but DXY doesn't, right? This doesn't purchase out the high, I am valid to take a trade because I need to have some sort of SMT. So if all of the pair are making higher highs, I cannot take it. If one of the pair is showing a SMT, but my pair doesn't want to purchase it out, I will be looking for that trade. But if all the pair push out the higher, push the low, makes lower, lower, low, higher, high, I will not be executing. And that's the lesson. And from now forward, if this trade hits take profit, I will not be risking 1.5% per trade. I'm risking 1% per trade. Why? Because I'm going for fixed 5 RR. I need 2 trades to phase 1. And if I risk for 5% and I need 2%, and I still need 2 trades to pass the phase 1, it doesn't make sense, right? I'd rather pick the one I'm risking less, but I'm still passing with 2 trades than picking the other one where I'm risking more. If I lose, I'm losing more, and it's gonna be harder for us to get to it's gonna be harder for us to get to the funny stage, as well as it's gonna still take it's still gonna take us 2 trades. So I'd rather pick the one that takes us 2 trades, less risk, but still makes us pass with 2 trades. And for the phase 2, it's gonna be the same thing. I'm still gonna, it both needs 1 trade there. So I'm gonna do that. And my entries, so these are my type of entries. It's gonna only be total soup. And so the first way is a failure swing. So let's say my pair has purchased up the low, the CRT low, and you have SMT with that low. I'll be looking for a trade without the confirmation of the model 1. This is how you can this is how you bypass the model 1 confirmation. Is either I have that, or now the next thing is gonna be the next one is market purchase a CRT low, market makes a low, and my pair makes another low. But the other pair does not make a lower low, it has an SMT. And I was still looking for a trade, but I'll be looking for a lower time CRT within the higher time CRT, looking for that 1 minute execution. And for 1 minute model 1, and look for the right model 1 with the right type of entry. Either if the market makes it impulsive to the upside or downside, I'll be looking for a model 1 7 entry and put a stop loss right below the threshold, or right below the body, because that would make sense. And could you just put on them on? Okay, yeah, that would definitely make sense. So that will be that lesson. And yeah, if my pair projects the CRT low and makes another lower low, or CRT high makes another higher high, but the other pair does not, the other pair pushes out the high as well and makes a higher high or lower low with my pair, I will not be executing. Is the only way I'm going to be able to execute if my pair pushes out the higher or low, is a higher high or lower low, if the other pair has a SMT. If there's no SMT, I'm not looking to take a trade. If my pair makes a failure swing where it has SMT, I'm looking to execute. If it does not make a failure swing and push out the low, but other pair has a SMT. So if my pair has an SMT with the other pair, I'm still with a trade. I'm looking for a 5 minute lower time CRT within the high CRT, or a 15-minute lower time CRT within the high CRT to execute a trade. And yeah, that's a lesson. I did not break materially. I will not break materially. We learned from the lesson from this week, which was Wednesday is always press the higher technical higher power. If I make the mistake once, I never make the same mistake again. I never ever do, and I never ever make the same mistake. And yeah, that's a lesson. Lesson on Tuesday is, we had a failure swing here. So we enter stop loss here. We put our entry right on the 1 minute model 1 or whatever, and put our entry there and go for a 5 RR, and that's it. And that's the lesson of Tuesday. And for a failure swing, if the failure swing is inside the rejection block, meaning inside the wick of the failure swing that we're making, inside the if we're making a failure swing and we're inside the wick of the candle that we're making a failure swing with the correlated pair, we will, if we're in a wick, we're either gonna enter on the start of the rejection block or the 50% of the threshold of the rejection block, because it's gonna be still considered the total soup, and put a stop right down there, and depending on what gives us the best RR. And yeah, that's gonna be the lesson of that as well. And yeah, that's what we're gonna enter the trade. But yeah, usually the only way I'm gonna enter a trade, if let's just say with a CRT high, market goes up, push out the CRT high, we're not gonna look for a model 1 either. For if the market doesn't give us a model 1 trade, goes down, gives a model 1, we either look for the threshold entry. I mean, the threshold entry. I mean, we're looking for the model, the rejection block to the super entry, down model, short it down. If it doesn't tap it, then okay, we're not looking for a trade. The only way, other way we enter the trade is the market goes up, taps our CFT high, makes a low, which it goes up higher, and the correlated pair goes up, makes a high, makes a failure swing, it goes lower. We have SMT. We will be looking for a trade, for looking for a 1 minute entry downside, eventually get shorted down. And same thing with this one. So if my pair goes up, puts up the high, and makes a failure swing and goes lower, I'm looking to execute a trade. The stop loss right down here and short it down. But if both of the pair goes up, puts up the high, and goes lower, goes up high, either both of them, I will not be looking for a trade because that right there breaks my rule. One pair needs to have SMT. If there's no SMT, I'm not looking for a trade. And I could execute my pair. If my pair is the one that purge it out, I'm still gonna be able to execute it because the other pair had SMT. If the other pair doesn't have SMT, I will not be executing it. And other ways we can enter a trade is, let's just say we have a model 1, market to the high, give us a model 1 goes lower. I mean, gives the model 1 confirmation, and we're gonna enter based on the resistance block, which could be right over here. Enter it and go lower. And this can be our entry. This can be no other type of entry. We did not enter the model 1, and our rejection block total soup dawn model will always have the model 1 confirmed beforehand, just for the rejection block body, just for the rejection block model 1 confirmed beforehand entry. And when we enter the rejection block to the super entry, we're always gonna have a model 1 confirmed beforehand, right? So let's say we're entering rejection block. In order for us to rejection block, we need to have a model 1 confirmed beforehand. You need to have the right model 1. If you don't have the right model 1, we cannot take it. If we don't have the right model 1, put the rejection block and put a stop loss. And yeah, because the model rejection block is a form of a total soup. And yeah, that's that. That's it, right? Gotta think a little bit. That's it, right, for the model rejection block? Yep, that is it. And our entry on Friday should have been this candle right over here. If you go to lower time frame, we did have a entry on Friday here for a lower time frame CRT because we had SMT right over here with the correlated pair. Our actual entry should have been here. Actually trade. We should have been out of the trade already, possibly, right? We should have already been out of the trade. Now, if you go to lower time frame, we had that right over there. Our entry is going to be this model 1, but this model 1 is so big. We look into the threshold. But the only time we're looking to bypass this model, the only time we're looking to bypass the model 1 entry. I mean, the threshold entry is if you have an impulsive move. Right over here, we didn't have an impulsive move, but over here, we did have an impulsive move. So now, if the market reaches back down to the model 1 itself, now, since we have the model 1 entry over here, our first entry is all the way down here. Since we already have this offered to us, we cannot, I mean, this is what I mean. We cannot enter the trade. We cannot enter the rejection block entry because we already had an entry beforehand right over here. So wherever the market gives us the first entry, we're going to enter the trade. But if the market goes away and offers the next entry, we cannot take it. We must stick to the first entry that we get from the that we get offered from the market because that's going to mess up with our RR, right? So right over here is the model 1. So now looking to enter this model 1, but we're putting a stop loss right down here. You could have entered this model 1, get us a tick entry, but that would have been difficult to enter the trade out of. So we're gonna enter here for a stop loss right down here and go for a 5 RR. We're putting a stop loss right below the wick, below the body, because we're doing damage margin slowly, and as well as market impulsive to the upside, so it makes sense to go all the way back down. And this, keep in mind, it's a 1 minute time frame, right? So we're looking for a 5 RR, which is still relatively, whoa, that's a fucking strong ass 5 RR right there. But for this one, you have to go around this. So the market impulsive to the upside, you could literally put your entry on the, you could put your stop loss right on the 50% of the threshold over here. Right, you would kind of get smacked on this shit, but yeah, if you had to just put an entry here, since the market is here, you could put an entry right. You could put your stop loss right below the fair value gap, somewhere around here, right below that fair value gap. So markets at the fair value can go up higher. the first inversion that happened. But in this case, the best entry would make, what the fuck is this? So for this case, your best entry would have been this first inversion. You can see every time every time there's an SMT or a purge, there's always going to be a model one. There's always going to be a fair value gap here. You can see in this case, there was a fair value gap right down here. Fair value gap got disrespected. Boom. And you can just wait for this fair value to get close above. Tap the fair value gap and long that shit up, right? So we're looking for a 1 minute interval to get disrespected. So 1 minute fair value gap. Fair value gap would be the best option. Why not a auto block? Why would auto block not be the best option to enter in a 1 minute time frame? Because the auto block, what market could do is give us a fair value gap here. It could be a fair value gap. Mark close above the fair value gap, but not close above the whole thing, and go lower, tap and go up higher. But guess that's way more risky. We want to close above this, enter the fair value gap, put a stop loss below this low, and go up high from here. Right, that would be the best option to enter straight out of. Right, so we're looking for a 1 minute fair value gap to get it inversed, and we're looking for the fair value gap to get tapped, and we can look into long that shit up after it gets tapped and put a stop loss down here and go for a 5 R, which would be right over here. So we would hit our take profit beforehand, right? So usually on the 1 minute time frame, I'm always looking for a 1 minute interval to get disrespected. If you go back in time with this trade, on this specific trade, our entry would have been the threshold of the resistance block right over here. So we would enter the resistance block itself, 50% of the resistance block. Put our limit order right over there and enter a long. That's what I've done here. But you know, in this case, it played the same role here. You can see the fair value gap was this. When the market made SMT, there was a fair value gap. Although you can see this one of the low to make this is the low that made the SMT. It doesn't really matter. We're just looking for 1 minute intervals that get disrespected here. 1 minute fair value, because every time there's an SMT, market is spiking in one direction. So there's a gap in 1 minute time frame. So looking for that 1 minute gap to get disrespected. Once you see it closer above, all I'm looking for is that fair value gap. The first. All I'm looking for the first, not this fair value gap being close above. I'm looking for the first fair value gap to get, close above on and retapped and go long it up. You can see this fair value gap gets to come all the way, comes all the way back down. Tap this fair value gap all my time before going up high. So that's the only way. And let's just say sometimes market may not retap this fair value gap. If it doesn't retap this fair value gap, guess what? We wait for the right marble one and we enter an resistance block. You know what I'm saying? Shit like that. That would be a little bit more riskier, but that's the only way it can little make sense. But usually market will always come back with just a fair value gap and go before moving here. So my entry on this would have been the limit order on the fair value gap. So looking for the right gap to get inversed, which it did right over here. But one thing, well, you got inversed. We don't really give a fuck about it getting re-inversed. Are we caring about getting it reversed one time, retapping it and going up here? All this goes below it. Do we really have to wait for this kind to close above right one more time before deciding to going longing it up? No, because this fair value gap gets used from this candle, right? So all we gotta care about, okay, retap it. We don't gotta wait for the reaction. Oh, this one that did close below it. We overall know, okay, this fair value can be the one to deliver. Although you can see this could be the IFG model. Not really. If you see over here, this would be. People call this what do you call it? What is this shit called? This is the IFG model, the Dodge guy candle. I don't give a shit about this kind. I don't even know his model. This is primarily what I fucking see in the market, right? I couldn't give a shit about his shit. But yeah, that's our entry. Our take profit would have been already met. And yeah, this is why I stay in this trade. Cool. We learn and we improve. Now we go to high time for draw liquidity. We have a weekly IRL to ERL. We have a weekly safety upside. We're going to meet the weekly safety right now. As well as on the monthly time frame, we have a monthly bullish candle. So next week I'm looking for just shorts, nothing else but shorts. If I don't have a context to this downside, I will not be looking for a trade, but we do have a weekly CRT right over here. That could be a potential push to the downside. We have a weekly CRT to the downside that could potentially use on the 4 hour time, on the daily time frame with daily ERL back to IRL, right? All those people saying, well, premium ERL to what about this current IRL? That will probably not get met, but it could definitely do because the weekly CRT lows right down here. Currently, we do have a daily ERL back to IRL, as well as we want to sell above the opening price of next week. So market definitely will go up higher for going lower. And we're aligning, our trades align with the weekly CRT high, so it definitely makes sense. And on a 4-hour time frame, that's what we have. Do we have an expansion daily range where in previous we want to sell, as well as yeah, that's that. We as well will probably have a daily C to the downside as well. That's the market forecast. Now let's go over to crypto. As well, we do have, you know, SMTs all around here. The SMT will highly likely not work out. We do have SMT, keep that in mind though, because the SMT right over here that we have with the previous week CRT low, we currently have an SMT with our CRT low right over here. The SMT, that SMT will highly likely not work. It will hit our take profit, then, you know, go lower. But the SMT is a good thing as well. So now we have SMT to the downside. The SMT could potentially hold and, you know, push lower. And then when it goes back down here, the entry without, you know, hitting our take profit, it is what it is. Our actual entry should have already been there. And yeah, that's a lesson. But this video, there will be a video published just specifically about the Friday trade and talking about the Friday lesson. And if the market does go back down, hit our entry, making us nothing, that will still be a good thing because our actual entry is supposed to be already there. Now, there's just a lesson. So yeah, that's that. Now let's go over crypto. Look, let's see what's up with BTC here. Bitcoin. What did I say? Bitcoin will have a new all-time high. And what happened right over here? Bitcoin went to a new all-time high, which was capped at 1.2K. 112,000. I don't want to say 1.2K. It was 112,000 new all-time high. Beautiful, fantastic. As I said, all the way down here at 77K mark, I said Bitcoin will make a new all-time high because of the seasonal tendencies. The last seasonal tendency was bearish, so it's going to be a bullish one. Now, what do we have in the market? Now, what do I see potentially happening to the market? Right now, we still have 1 month and 6 days for this monthly candle closure. So I'm still expecting higher prices until this monthly candle closes. But I mean, until this 3-month candle closes. After the 3-month candle closes, I'm looking for shorts. And that's where I think the bear market will highly likely start. So when that's going to happen, my coins make me money. I'm going to get the coins and chill out with my profit. But right now we have a 3-month CRT, which still has not closed yet. We still have 1 month, 6 days. So we currently are having here. So unless this candle closes, we don't know it's going to be any bearish price action. So we're still going to see some bullish price action until that 3-month CRT closes. Right now, our drawn liquidity already got met. On the weekly, our drawn liquidity already got met. So now what do we currently see right over here? I currently see us pulling back possibly to 102K mark and push on up higher. We have a weekly ERL back to IRL. We go from weekly IRL back to ERL as well as a weekly to the upside and push it up until this 3-month candle closes. And that's for this. That's for, you know, that is for our BTC. This weekly fair value gap could be a very strong factor to push it up to all with new all-time high. Yeah, big dump will definitely happen. So those who have a coin here, you will get, if your coin is kind of clapped like most of my coins, you are gonna get clapped. So be careful. But on Ethereum, as you can see, our joint got met as well. On Ethereum, we have a 3-month CRT low gas soup. We got 3-month CRT high. We have a 6-month IRL back to ERL, as well as a 12-month CRT, 3-month CRT low gas soup, got 3-month CRT high. On the monthly, we have a monthly ERL back to IRL. We don't really give a shit of this IRL because markets want to go overall bullish. Now, on the weekly time frame with weekly CRT, we could potentially see the weekly CRT low getting sued first, then going weekly CRT high because Bitcoin's gonna pull back, a little harder, then go up higher. But yeah, with weekly CRT, we're looking for a weekly CRT low getting sued and going weekly CRT high, as well, weekly IRL to euro. I'll go for a 2 to 3. We have a weekly IRL, we can go back to the ERL, but you'll probably do a stronger pullback. There's a weekly CRT, can possibly go down here, then eventually think about going higher, because Bitcoin's gonna pull back. And on the Ethereum Bitcoin dominance, I want to see, because this closed the next 6 days and 6 hours, I want to see this candle close above this monthly, number 1 and above this monthly fair value gap right over here. If you can close above that, that can give us a very strong sign for a alt season. So right now everything is a discount, so you want to buy that shit up. Just not to give a fuck about this right over here. We have Solana. 3-month look at soup, 3-month high with 3-month key level, as well as a monthly series to the upside. Monthly high got met, as well as we have monthly, these all got soup and monthly range high. On the weekly, we don't have much here. As you can see, as I said in my last video, we're looking for a weekly CT look in soup. We're going to weekly CT high. Guess where the market went? To the weekly CT high. Now I want to see a lower. I want to see a price push up higher after pushing out this low one more time, the 159, and eventually go to this right over here and go up higher, because Bitcoin is going to pull back. And this is my weekly crypto market update. This is my weekly crypto market forecast. Thank you for watching. Make sure you guys like, comment, subscribe, share, and join the Discord link description down below, and join our paid signal group right down here. And I'll see you guys later. Peace out. Blood clot. Fuck is this, bro? Pissing me off, man. All right, chat. That's the weekly CRT. That's the weekly. That's a Saturday. That's a Sunday market update. Thank you for watching. I'll see you guys later, alligator. And let me go and upload the video. See you guys later. I ain't got money in my decks, but I got some shit to flex. I don't know what this is. There are missed one. Slash, honey, think about it. Honey, think about it. I see you guys later. Peace out. Peace out, my Negroes. Peace out, my niggies. Peace out, my fucker.